As per recent research report, India has emerged as the largest importer of arms between FY17 to 21, accounting for 11% of global arms sales. And the obvious reason is India's border issue with its neighbor China and Pakistan. But then I came across very interesting data point. It says, in spite of India being the largest importer, there is a fall in import volume by 21% due to government's push towards Atmanirbhar Bharat. And that created the trigger for me to research the top listed public companies in defense sector in India. Hello friends, my name is Sahil and this is my Personal Finance Academy. In the latest finance budget, Finance Minister has allocated a budget of 5.25 lakh crore for defense sector. Just to give you an idea, this budget for defense sector is 13.3% of total government expenditure planned for FY22-23. So now you can imagine how much money Indian government spend on defense sector. And this budget is only increasing every year. For example, last year the budget was 4.78 lakh crore. So the current year budget is 13.3% up from previous year. But you would be surprised to know that within this budget, Indian government has given a clear priority to indigenous made in India companies. Out of the total budget of 5.25 lakh crore, 1.38 lakh crore is for procurement of new arms equipment, and within that, 68% of procurement is reserved for domestic Indian companies. Last year, the number was 58%. So you can imagine how serious the government is to promote the domestic defense sector in India. In fact, Indian government has announced to acquire military equipment worth 5 lakh crore rupees from domestic firm in the next 5 to 7 years in line with its policy of promoting indigenous defense manufacturing. Clearly, India wants to reduce its dependency for import of defense equipment. In August 2020, the ministry announced that India will stop the import of 101 weapons and military platforms like your transport aircraft, light combat helicopters, conventional submarine, cruise missiles and sonar system by 2024. Then a second list was released that put import restriction on 108 military weapon and systems such as your next generation corvettes and airborne early warning system, tank engines and radars. Then Defense Ministry launched the third list in December 21 to ban import of 351 items over a staggered timeline. All these 351 items would be eventually made in India. So basically, the government plan is to make India a hub of manufacturing defense and military equipment. In May last year, government announced increasing the FDI limit from 49% to 74% under the automatic route in the defense sector. All these factors would provide a huge boost to defense sector in India. So in this video, I have covered 7 stocks that would immensely benefit from government push towards the domestic defense sector. But this video is only for educational purpose. Do not invest blindly based on tips. Make sure that you do your own research before investing. And the best investment you can do is by investing in knowledge so that you don't have to depend upon others for investment tips. You can also explore my online course on money management where I have covered everything that a person should know about personal finance and investment. Alright, now let's get started with the video. Number 7 stock in my list is Bharat Electronics. Established in 1954, BEL is one of the 9 PSUs under the Ministry of Defence of India. It has been granted Navratna status by Government of India. BEL is the lead integrator of Akash, which is Indian-made guided missile air defence weapon system. Bharat Electronics is primarily engaged in the business of manufacturing radar, communication and electronic warfare equipment. The company invests approximately 7.5% of its turnover in R&D, which is the highest among defense PSUs. As far as order book is concerned, in FY22, Bharat Electronics order book stood at 57,000 crore, which is up 7% from year earlier. In the year 21-22, BEL secured significant orders worth 18,000 crore. It is also in the process of joining with Bharat Heavy Electrical Limited, that is BHEL, to set up a joint venture to make solar photovoltaic components. Now let us look at the financials of the company. Now if you look at the financials of Bharat Electronics, its revenue has jumped from 7,354 crore in March 16 to current levels of 15,946 crore in trailing 12 months. Look at this consistent increase in the revenues of the company. The CAGR rate for this growth is somewhere around 14.4%. So not bad. Next, if you look at the Bharat Electronics profit, It was 1337 crore in March 16 and currently it is 2613 crore in trailing 12 month. And again, it has been pretty good growth in terms of consistency, but in terms of CAGR, the growth is somewhere around 12.4%, which is decent, not too high, not too low. Now, if you look at the share price movement of the company in last 1 year, so Bharat Electronics is currently trading at levels of 253 rupees, and in last 1 year, the company has given a return of 101%. And if you look at the other financial details, then for example, you can see the profitability ROC is 27.9%, which is very good. ROE is 19.9%, which is again good. Debt to equity is 0, so company is completely debt free. And apart from this, we can see it has got a dividend yield as well for 1.157%. And in terms of market cap, it has got a market cap of 61,890 crore. So it is basically a large cap company. Now the most important part, which is the valuation. So if you look at the P ratio of the company, it is commanding a P of 23.7, and that for me is looking very reasonable. So at a P ratio of 23.7, it is looking very, very reasonable. Number 6 stock in my list is MTAR. Established in 1970, MTAR is in the business of manufacturing various machine equipment, assemblies, sub-assemblies and spare part for your energy, nuclear, space, aerospace, defense and other engineering industries. MTAR serves customers in nuclear, space, defense and clean energy sector, and its portfolio include 14 products in the nuclear sector, 6 products in the space and defense sector and 3 products in the clean energy sector. It has a long-standing relationship of over 3-4 decades with customers such as your ISRO and DRDO. MTAR also contributed to India's moon mission Chandrayaan-2 by manufacturing spacecraft's crucial part. As of 31st March 21, MTAR has an order book of 416 crore rupees. Now let us look at the financials of the company. If you look at MTAR revenue, its revenue has increased from 81 crore in March 16 to 293 crore in trailing 12 months. Look at this consistently sharp increase in the revenue of the company, which is a CAGR growth of 25%, which is fantastic. If you look at the profits of MTAR, it was 0 in March 16, then loss minus 15 crore in March 17, then look at this 5 crore 39, then a slight dip, but currently it is 59 crore. So if we compare from 5 crore to 59 crore, it is basically 85% CAGR growth in last 3-4 years. Now if you look at the share price movement, MTAR is currently at levels of 1715. So it had its IPO at levels of 575, and from there it is already up almost 3 times. So there's a sharp growth in the share price of the MTAR technology. Then if you look at the other financials, then it has got a ROCE of 19.2%, ROE of 13.1%. So profitability is alright, not very high. If you look at debt to equity is 0.11, so very reasonable, so almost negligible debt to equity. Now if you look at the market cap of the company, it is 5,270 crores. So basically it is a small cap company. As far as the valuation is concerned, it has got a P ratio of 89.2, which is certainly very high. Now one of the reasons is obviously it is one company which is very small and growing quickly, and that is the reason it is going to command a premium. But should you pay a P of 89.2 is a question, because for me this valuation is on the higher side. Number 5 stock in my list is Hindustan Aeronautics Limited, that is HAL. Headquartered in Bangalore, HAL is an Indian state-owned aerospace and defense company. It was established in 1940. It means HAL was established even before we got the freedom. In fact, HAL is one of the oldest and largest aerospace and defense manufacturer in the world today. Hindustan Aeronautics is engaged in the business of manufacturing of aircraft and helicopter and their repair maintenance as well. HAL plays a strategic role in India's defense program, being the only Indian company having specialization in aircraft manufacturing and providing its maintenance and related services. HAL is currently leading some of the most strategic projects in the aerospace and defense sector in India with an order book of 1 lakh crore rupees. Its production has doubled from 8 to 16 aircrafts per year. HAL recorded its highest ever revenue of over 240 billion rupee for financial year ended in 31st March 22. Now let us look at the financials of HAL. Now if you look at the revenues of Hindustan Aeronautics, it was 16,758 crore in March 16 and currently it is 23,798 crore. And again, there's a consistent increase, but the growth in revenue is not too high. Its CAGR growth is somewhere around 6%. If you look at the profitability, its profit was 2004 crore in March 16, then it fell down, and again from there there's a sharp increase. So consistent increase in the profit, and currently it is 3,597 crore. So from these levels of 2000, the CAGR growth is somewhere around 10.3%. So basically HL is not growing at a very fast rate, but there's a consistent increase in the profitability in last 5-6 years. And if you look at the share price movement, it is currently trading at levels of 1710 and it is up 80% in last 1 year. Now if you look at other details, it has got an ROCE of 26.2%, which is brilliant, ROE of 22.6%, which is again excellent, debt to equity is 0, again great. Apart from this, it has got a market cap of 57,311 crore, which means again it is a large cap company. And if you look at the stock price, it has got a P ratio of 15.9. Now again, since the company is large enough, it is not growing at a very sharp rate, and that is the reason it doesn't command a very high premium. But again, at a PE ratio of 15.9, it is looking very reasonable. Number 4 stock in my list is L&T. So L&T is basically a huge conglomerate with business across your infrastructure, services, power, defense, hydrocarbon, etc. Although infrastructure is the biggest contributor in the revenue of the company with 46% contribution in Q3 of FY22, and defense sector contributed just 2%. But defense is a growing business within L&T Group. L&T provides indigenous design to delivery solutions across the defense spectrum, from surveillance to strike capability, modern mobility platform. It also offers specialized turnkey defense construction solution like your underground structures, military bases, storage depot, smart infrastructure, and modernization of existing facilities. L&T's shipbuilding arm offers solution from concept design to construction for new builds, as well as their repair, refits, and midlife upgrades. Recently, Defense Ministry has signed an 887 crore rupees contract with L&T for procurement of 2 multi-purpose vessels for the Navy. Now let us look at the financials of L&T. Now if you look at the revenues of L&T, it has grown from 1.1 lakh crore in March 16 to 1.51 lakh crore in trailing 12 months. Again, a consistent increase in the revenue, although the rate is not that high. If you look at the profits have jumped from 4,281 crore in March 16 to 11,583 crore, and currently it is 8,341 crore in trailing 12 months. So there's a fall. Again, it is due to some taxation and all of that, but all in all, the growth is pretty good for L&T as well. Now if you look at the share price movement, it is currently trading at levels of 1710 and the share price is up somewhere around 28% in last 1 year. If you look at other financials, it has got an ROCE of 15.3%, which is alright. ROE of 19.3%, which is again pretty decent. Again, if you look at debt to equity, it has got a high debt of 1.66 because it is mainly into construction and all of that, and that requires a lot of capital. Apart from this, it has got a market cap of 2.4 lakh crore. So it is certainly a large cap company, a pretty large cap company. And as far as valuation is concerned, it is trading at a P ratio of 29. So this valuation, considering the future growth prospect, is looking decent. I won't say it is very high, and also I won't say it is very low. Again, it is looking reasonable. Number 3rd stock in my list is Bharat Dynamics. Established in 1970, Bharat Dynamics is one of India's manufacturer of ammunition and missile system. Again, it is a PSU and fall under the Mini Ratna category of Indian government. It covers a wide range of weapon systems such as your surface to air missile, air defense system, heavyweight torpedoes, air to air missile, etc., making it a defense equipment manufacturer. BDL has also entered into the arena of refurbishment of old missiles. Company has built a strong in-house R&D division with talent drawn from premier institutions. The division is leveraging emerging technologies like your AI to develop state-of-art weapons. The order book position of Bharat Dynamics Limited, which recently signed a contract with Indian Army for manufacturing and supplying of anti-tank guided missile, stand at rupees 11,400 crore. BDL has also signed agreement with foreign equipment manufacturers and startup companies to develop next generation weapon. Now let us look at the financials of Bharat Dynamics. If you look at the revenue of Bharat Dynamics, it was 4,079 crore in March 16, and from there it has actually fallen to 3,000. Then in March 21 it fell down to 1914, but from there it has jumped to levels of 2,573 crore. But all in all, there is a fall in the revenues of the company. If you look at the profitability, it was 562 crore in March 16, but then it was constant, not much growth. Then revenues fell down a bit, then increased, then again fell down due to COVID, and again it has jumped to 496. So all in all, if you compare from last 4-5 years, there is not much growth in the revenues of Bharat Dynamics. As far as share price is concerned, it has got a share price of 806 rupee, and in last 1 year, look at this, it has grown, it has given a return of 147%. And if you look at other financials, it has got a ROC of 13%, which is not that high, ROE of 9.74%, which is again not that high. Debt to equity is 0, which is good. Apart from this, it has got a market cap of 14,800 crore. So it is a sort of small cap company. As far as PE ratio is concerned, it has got a PE ratio of 29.9. Now, if you compare it with the historical profit and revenue growth, the valuation is on higher side. But if you look at the future growth prospect, the valuation is looking decent. So as far as valuation is concerned, it is looking reasonable. Number 2 company in my list is Data Pattern. Data Pattern recently had its IPO in December 21, where it got a stellar response and the company was listed at a premium of around 50%. Established in 1985, Data Pattern is a vertically integrated defense and aerospace electronic solution provider catering to indigenously developed defense products. Its strength lies in designing complex products with reusable building blocks, which allow the company to keep low development cost and win a large number of orders on single vendor basis, thus raising the entry barrier for competitors. It has design capabilities across the entire spectrum of strategic aerospace and defense electronic solution, including the processors, power, radio frequency and microwave equipment, embedded software and firmware, and mechanical engineering. Currently, the company is engaged in the supply of critical products to several prestigious defense projects in India, including the Light Combat Aircraft, the HAL Dhruv, Light Utility Helicopter, and BrahMos missile program. Data Pattern reported strong order book growth of 41% CAGR over FY 18 to 21. Its order book at the end of December 21 stood at 580 crore rupees. Now let us look at the financials of Data Pattern. If you look at Data Pattern revenues, it was 131 crore in March 19 and jumped to 224 crore in March 21. Again, we don't have too much data for Data Pattern because it recently had its IPO. As far as profits are concerned, look at this. It was 8 crore in March 19, jumped to 21 crore, and it is now 56 crore in March 21. Now, if you look at the share price movement, Data Pattern is currently trading at levels of 884 rupee. So it had its IPO at levels of 575 rupee, and from there it has jumped to levels of 884. And this has all happened in last 3-4 months. So it had its IPO in December 2021, and since then it has jumped almost 40-50%. Now if you look at the other financials, it has got an ROCE of 39.1%. Look at this brilliant ROCE, ROE of 30.8%. So one of the best profitability in all the defense stock that we discussed. Then if you look at the debt to equity, it has got a debt to equity of 0.16, which is again negligible. As far as market cap is concerned, it has got a market cap of 4,596 crore. So it is certainly a small cap company. And if you look at the valuation, again, this is a problem. It has got a PE ratio of 82.7. So in terms of valuation, it is looking expensive. But again, it is going to command premium because it is a small cap company and it is growing quickly. But again, the question is, what is the right valuation at which you should add this stock? So at current levels, it is certainly looking expensive. Now, number 1 company in my list is Paras Defense. Paras Defense is also a newly listed player. It had its IPO in October 21 and it got listed at a premium of 185% on first day of listing. So those who got the allotment tripled their money on day 1. Established in 2009, Paras Defense is primarily engaged in the designing, development, manufacturing and testing of variety of defense and space engineering products and solutions. Company caters to 4 major segments: defense and space optics, defense electronics, heavy engineering and electromagnetic pulse protection solution. It is the sole Indian supplier of critical imaging components such as your large size optics, and diffractive gratings for space application in India. It is one of the leading indigenously designed, developed and manufactured, that is IDDM category private sector companies in India. Now let us look at the financials of Paras Defence. Now if you look at the revenues of Paras Defence, it was 48 crore in March 17 and currently it is 133 crore in March 21. So actually it has not grown much. It did grew in March 2018, but then from there it has actually fallen. And if you look at the profitability, again it was 2 crore in March 2017 and it jumped sharply to 25 crore, but from there it has fallen to 15 crore in March 21. As far as the share price are concerned, currently it has got a share price of 732. So Paras Defence had its IPO at a price of 175 rupee. So from there it is currently up 4 times in last 1 year since its IPO. Now if you look at other financial details, it has got an ROCE of 11.9%, ROE of 7.93%. So profitability is alright, not too high. Debt to equity is 0.29, so it is not that high again. As far as market cap is concerned, it has got a market cap of 2,800 crore. So it is a very small cap company. And if you look at the P ratio, that is a big issue. It has got a P of 190, which is super expensive. So I don't know why this company is commanding such a high valuation, because in terms of growth in the past, the growth is not too high. But yes, one thing is for sure, it has got a very bright growth prospect. The only concern for me is the valuation, which is looking very high at current levels. So in this video, we discussed the defense sector in India. India is already the largest importer of defense equipment and has a lot of focus on indigenous defense companies. Defense Ministry has already taken a lot of steps, including the ban of import of many defense related products that would be manufactured domestically. Then we discussed the 7 listed defense stocks with bright growth prospect. The names include Paras Defence, Data Pattern, L&T, Hindustan Aeronautics, Bharat Electronics, Bharat Dynamics and MTAR Technologies. All these companies have very bright growth prospects. The only concern is that majority of them are overvalued at current levels. And before you invest your money in defense sector, make sure that you also understand the risk aspect. For example, in defense sector, the receivable days are long as the government is the key client in most cases. Hence, there could be heavy debt on the balance sheet if business is capital intensive. Also, the orders depend upon the budgetary allocation towards the defense sector. So if the government decide to reduce the budget for defense sector, it would impact the business of defense companies. Although it doesn't look like in the near term the government would reduce the budget. So all in all, the defense sector is one sector in India that has a very bright growth prospect. Now tell me in the comments, have you invested in any defense companies? If yes, mention the name. And if you like this video, do share it within your circle to spread the reach. I'll see you in next video. Till then, take care.